Today's topic is markup margin, and markup margin is part of incomplete record. So normally when we teach accounting, it is when we teach incomplete records, we teach markup margin. And if you guys see the book of O-level accounting, you guys will find markup margin in the chapter incomplete records. But from the past paper point of view, you guys should know this, that in the past papers, we do have questions of markup margin with, let's say, manufacturing. So there is a question in the past paper. In fact, it's in a very recent past paper, and it is with markup and manufacturing. So markup and manufacturing is together in that question. So the students must be able to apply markup margin to any topic that has income statement or that has cost of sales. So there is another question that has it is an income statement question, and they have given a margin in that. Similarly, there are a lot of incomplete records questions in which markup margin is tested. And there are a lot of MCQs in the past paper. So normally there are MCQs in every paper for markup margin. Not many MCQs, but like 1 or 2 MCQs based on markup margin. So what markup is and what margin is. So markup, these are both ways of calculating your profit. So what for markup, I always tell my students that markup means that, let's say this is a pen, and this pen I got for 100 rupees. So 100 rupees is the rupee value of this pen, and basically I purchased this for 100, and I am doing I am selling these pens, and this is my business. So basically I'm trading right now, and I'm purchasing pens from somewhere else, and I'm selling those and making a profit out of it. So what I'll do here is that this pen I got for 100 rupees, and let's say I decide to mark this pen up by 25 rupees. So I'm going to sell this pen for 125. So my selling price will be 125. So what the conclusion of it all is that whenever you have been given markup in the question, you guys should assume, so assumption is that assume that cost of sales, so the cost of purchasing the product, that the cost that basically what the trader had paid for buying this pen. So whenever I am going to trade this pen, or I'm going to sell this, whenever I'm going to sell this pen, what I'll do is that I am going to purchase these pens from somewhere else and sell it in my own market. So what I'll do is that, let's say I paid 100 rupees to get this pen, one pen, and like I decided to take a profit of 25 rupees, and I'm selling it in 125 rupees in the market. So I'm selling it for 125 rupees in the market. So that means I am so the cost of the product is 100. So assume cost of sales is 100. So if we say in percentage terms, cost of sales is 100%, and then gross profit in this case, which I just told you guys was the pen case, gross profit in this case will be 25%, and then my revenue or my selling price, so revenue or sales or the selling price of one pen, it's one and the same thing, is going to be 125. So 100 was the cost, we charged a profit of 25, and then we decided that our selling price should be 125 rupees. So in percentage terms, you guys should know this in percentage terms, because I'm going to apply this knowledge to questions also. So what you guys need to know this, simply assumption is that the cost is 100%. Gross profit in this case is 25, because I am taking 25 rupees on every pen, and then revenue or the selling price of one pen will be 125. So what you guys need to know also is the formula for markup. So the formula for markup also, this has been given in the syllabus document, is cost of it's gross profit. So gross profit in the numerator, you divide this by cost of sales. So gross profit divided by cost of sales multiplied by 100. So this is going to tell you what percentage is gross profit of cost of sales. So in this case, again, what is the percentage of what is the proportion of gross profit in percentage terms of the total cost of sales. And you guys know this, that cost of sales is simply how much did we pay for purchasing that product, and what was, whatever we were selling, whatever we sold, what was the purchase price, the total cost that we had paid to purchase this all of that inventory which we have sold. So that is simply cost of sales. Other concept here is margin. So in case of margin, what you guys need to do is that assume, so in case of margin, here I have written gross profit as a percentage of revenue. So you guys need to assume that selling price or revenue or sales, it's one and the same thing. All of these are used interchangeably. So selling price or revenue or sales is 100%. So now you guys are assuming that selling price or revenue is 100%. And let's say if the question tells you that margin is 20%, what you guys will do is that, okay, assumption will be that revenue is 100%, and you guys know revenue minus cost of sales gives you gross profit. So profit here is 20, cost of sales is X, revenue is 100, so now cost of sales will be 80%. So now you guys know, if you guys know that revenue is 100 and gross profit is 20, so 100 minus 20 is going to give you the cost. The cost here in this case will be 80%. So cost of sales will be 80%, and gross profit, again gross profit in percentage terms, will be 20%. So this knowledge you guys need to keep in your mind in order to apply this to the questions. The assumption thing you always remember, if markup is given in the question, cost of sales is 100%. If margin is given in the question, revenue or selling price is 100%. So this knowledge is very important for solving the questions. So the next formula here, which is very, very, very important for you guys, for markup margin especially, is the cost of sales formula. So cost of sales formula is also the cost of sales section of the income statement. If you guys see this section of the income statement, this is what we have found, cost of sales. This section of the income statement is the formula for cost of sales also. So the cost of sales formula here is opening inventory plus purchases. So whatever inventory we had at start, we purchased more inventory, so that increased our inventory, the cost of our inventory that we had in the warehouse. Carriage inwards we always add, because whatever you are purchasing this year, so whatever purchases you are making of inventory, carriage inwards is basically the cost of transportation that you are paying to bring the inventory to your warehouse. So that becomes the part of the cost. So we add carriage inwards, less purchases returns, because we have returned the goods to our supplier, returned some goods back to our supplier. So that is going to decrease the cost of sales of our business. And then less drawings of goods, because drawings of goods is that the owner takes out goods for his personal use. So it's not part of the cost of sales section of our income statement, because obviously the concept here is business entity. If the owner takes out goods or cash from the business, the owner should record that as drawings. So the owner cannot, these goods which the owner has withdrawn are not part of the cost of our goods that are there in the warehouse. So they are not business goods anymore, they are back to the owner. So the owner is taking them out for his or her personal use. Then you subtract closing inventory, because closing inventory is the remaining inventory in the warehouse. So this inventory has not been sold. So whatever we have sold, we have not sold this inventory, that is the closing inventory. So that is equal to cost of sales. So you guys need to know the formula: opening inventory plus purchases plus carriage inwards minus purchases returns minus drawings of goods minus closing inventory is equal to cost of sales. So what normally examiners do in the question, they give you a markup or a margin, and then they are going to keep any one of these values. So any opening inventory or purchases or carriage inwards or purchases returns or drawings of goods or closing inventory as unknown. So what you need to do is that you need to work out the cost of sales, and then you need to make whatever value is missing, you need to make that, you need to assume that to be as x, and then you need to calculate the value for x. So you guys will understand that once we solve more questions related to markup margin. So these were the basic concepts that I always teach my students for markup margin, and then in the next few videos I'll be solving some questions related to markup margin. So you guys need this video for the next few videos. Thank you so much for watching.